Welcome to our webinar today. Thank you so much to Caroline and Dan, our friends from the SBA, who have been there through thick and thin with all of my questions when I email them, please help. Thank you so much. You have been so helpful to our member businesses, and I truly cannot help you enough for your always quick replies and your willingness to help.
You're welcome.
Really appreciate it. So we're going to talk about PPP forgiveness today. This is a topic that a lot of our businesses have asked about and have been curious about with the second round of PPP. You all got your PPP loans, and now you're trying to figure out what you need to do to get those loans forgiven. So that's why we have Caroline and Dan here today. Thank you again. And I will pass the torch to Caroline, but first, to the attendees, we are going to do Q&A at the end. So if you have any questions as Caroline and Dan are going through the presentation, please pop them into the Q&A box, and we will address them at the end. So without further ado, Caroline, passing to you.
All right.
Thank you so much.
Yeah. Oh, I see a kid in the background.
Oh, yes, that is my son.
Oh, that's so cute. Okay. So my name is Caroline Williams. I am an outreach and marketing specialist with the Massachusetts District Office in downtown Boston. So it's my job to help put sort of a face on the agency and let everybody know what the SBA is. So the district office is like the outreach and marketing arm. So we let everyone know, hey, this is what's going on at the SBA. These are what our programs are about. And we help connect you with resource partners who are, I'll mention them in a second, but oh my gosh, so cute. They will sit down with you and talk with you about every step of the way, whether it's starting your business, like getting your business plan together, or getting to grow and expand. So I'll go over that in a second, but so SBA was created in 1953 to help people start, grow, and expand their small business, whether that's providing access to capital through different loan programs or helping your business bid on federal contracts. We have 68 district offices all over the country. Some states have more than others just because of sheer geographic size. I think there are 12. Are there 12 or 13 of us in the Massachusetts office? I cannot remember.
Well, I think there's a little bit more because we have a couple temporary hires under the CARES Act. So I think we're close to maybe like 14 or 15, okay. But yeah, it's a small group for the state of Massachusetts.
It is, yeah. Yeah, so we have one branch office in Springfield. So that covers like the western part of the state. And our website is just sba.gov/MA. I can drop that in the chat too. But if you guys want to contact us, you can always email us, and I'll drop this in the chat too, at massachusettsdo@sba.gov. So that's the contact information. If I don't know if we have different slides or anything, but yeah, if you go to our website, it's very well laid out. I think it's very user friendly, very easy. So there are 4 different tabs. If you click on business guide, it talks you through starting, growing, expanding. It'll give you everything you need for links from like registration, getting your tax ID, all that sort of stuff. You move over to funding programs, the funding programs tab, which is that will tell you all about our loans, our grant programs, and then our lender match tool, which is something you can put in your information if you're looking for a lender for whether it's PPP or one of our other loan programs, and put in your information and they will match you with a lender who can work with you. And then I mentioned our resource partners. We have a number of lovely resource partners who do excellent work. Just a few of them: the Center for Women in Enterprise, the Veterans Business Outreach Center, Massachusetts Small Business Development Center. I can drop these in the chat as well. It's a lot of different resources, but basically like I said, they can sit down with you, help you through whatever it is. I think they can also help you with PPP loan, like applications, correct? Like if you were to be like, hey, I don't super know what to do, you can like bring your stuff to them and they can help you out.
Yeah, definitely. And that's why we're partnering up with all the chambers and stuff throughout the state too, because, a lot of our community leaders from chamber organizations and resource partners and other cities and towns, they're really out there, with all the same mission in mind. We're trying to help small businesses. These programs can be very complicated sometimes, very confusing, especially with everything that's offered out there. So, we're all trying to come together to help you, the small business owner. So hopefully, we're lucky here in the state of Massachusetts that we have so many, resources and folks that want to, help out this community.
Yeah.
And I'll just jump in super quickly too. And yes, absolutely, Caroline, we're here to help and have worked with our membership very, very closely on all of the different loan programs that the SBA has made available. And again, I cannot tell you how helpful it is to have the connection that we have with you, so that when questions come up for us, even though, I read up on everything and I try to be as prepared as I can to help people through their applications. But whenever I've had a question, you two have been so supremely helpful, and I'm really, really thankful. And I know that when I thank you, I'm doing so on behalf of our membership as well.
Thank you. That's nice. Let me see. The last thing that I will mention, well, first of all, regular loan programs and other things are still happening. I know a lot of the focus has been like PPP and EIDL and everything, but regular programs are still operable, I guess. But there are two sort of newer ones, and you've probably heard about these in the news a lot, is the Shuttered Venues Operator Grant, which is for like cultural and sort of arts venues that have been closed. And then there is the Restaurant Revitalization Fund, which is an award program for restaurants that have been hit pretty hard by the pandemic. Both of those are on our website as well. If you go to the SBA website, there's a little yellow ribbon at the top that says COVID-19 relief. You click on that, it takes you to all the different types of relief programs that are out there for COVID. And so restaurant revitalization and shuttered venues are also there, with all the contact information that you would need and all the documents that you would need in order to figure out what you need to do to apply and the process. And yeah, there is that. So I'm not going to go into that because that could be like a whole nother thing, but those are out there. So I think that about covers it. And so I am going to pass this to Dan, who knows more than I do about everything.
Thanks, Caroline. And, thank you for everybody for joining. I'm Dan Martiniello. I'm one of the lender relations specialists here at the Massachusetts District Office for the SBA. So we are going to go hot and heavy today with the PPP forgiveness process. As most folks probably know at this moment, for the most part, the PPP funds have been exhausted nationwide. So, what's that next step is applying for forgiveness. So there's a lot of information to soak in today. But what's good is I'll make sure everybody has a copy of today's presentation too. We'll send it out to the chamber, so you can disperse that to the community after the presentation, and then it's going to be on recorded as well, so you can go back and say, hey, what did Dan say? And minute 15 of this presentation, you can go right back and hit that rewind. So let me just make sure. I'm just going to pull up the presentation, so just bear with me 1 second while I do that. Just get this, and hopefully everybody can see the first page. It says the Paycheck Protection Program Forgiveness Overview. Caroline, can you see that on your end?
We are good.
All right, cool. Yeah, I just have to minimize my screen because it takes up my whole laptop screen when I do the presentation here. So yeah, so like I said, we're gonna go over the, give you a forgiveness overview on the Paycheck Protection Program. As we all know, this program uh, has been around since basically the onset of the pandemic. So, it first started back in the first week of April of 2020. They've had billions and billions of dollars appropriated for this over the course of the last year or so. But with that said, the funds have predominantly been exhausted. There are a few lenders that are considered community financial institutions that are accepting applications still. I know a few of them here in Massachusetts that were qualified to. They recently have shut down their application portal because they did receive a lot of last minute applications that they just weren't going to be able to get through in a reasonable amount of time. So, but if you need information, on who may still be available within Massachusetts because you didn't get a first or a second draw, you can feel free to reach out to me. I'll make sure my email's in the chat just because I want to give you the most up-to-date information at that time because the lenders could make decisions to change things at any moment. So let's get into it. So when we have the loan forgiveness requirements, there's been some changes to the overall PPP program throughout the process. And then, both when you were applying for the loan and how you could utilize these funds. And also, that created a variety of changes, for loan forgiveness. For the most part, though, what you're going to see here in today's presentation is that all the changes that have happened are positive for you as a small business owner. The changes were intended to make life a little bit easier to get through this loan forgiveness process. And, I really don't want to, scare anybody when it comes to this process too, because, overall, just to give you kind of a big picture of the forgiveness applications that have already been submitted nationwide, upwards of 99% of the forgiveness applications that have come in, when it was finally, when the decision was finalized, 99% of them have been fully forgiven. So I just want to, make sure, folks, for the most part across the board, your loan should be forgiven as long as you utilize it for the correct, purposes. So, with some of the rules that changed based on the amendments from the Economic Aid Act, the interim final rule, basically implements changes related to the forgiveness and the review of some loans made under the PPP, which, the PPP was originally established by the CARES Act. The interim rule that recently came out in the beginning of 2021 is providing borrowers and lenders with additional guidance, and it informs them of some review process depending on the ultimate decision made by the SBA. So what you're going to see here, there is some additional reference periods that were added for seasonal employers. There was also some things that basically became trivial, for certain size loans when it came to, respect to, hiring folks and how you had to document that. Because mostly what happens with this program is the program's designed to keep your employees employed, right? That's why it's called the Paycheck Protection Program. So, during the pandemic, there was a lot of, issues where small businesses had to lay off a lot of their employees initially because they didn't know, what was going to happen. They didn't know, when the PPP money was going to initially become available. So, there were a lot of rule changes that kind of made it easier for folks if they could not rehire a staff back or couldn't hire similarly qualified individuals back, that, the PPP program, changed so we wouldn't negatively affect your forgiveness amount. So, that's really what the intention is with forgiveness, is they don't want to hurt the small business on things that are very trivial at the end of the day. So also too, you're going to see, it's going to, there were some things when it came to reductions. Also, they eliminated, when you could basically, what was your last day for the loans covered period, and when you had employer salary reductions. And then also they changed a lot of rules for your very small dollar loan. So $50,000 or under. There's going to be a lot of exemptions that you're going to find out here in this presentation when it comes to, your full-time equivalent employees, or, salary reductions beyond 25%. You're going to be exempt from the majority of those things that we'll discuss. So I just want to give an overview of the eligible costs for forgiveness, right? Because as most folks know at this point in time, you could utilize the funds for a variety of things. It was pretty, cut and dry in the very beginning as far as, payroll. And then as far as non-payroll expenses, they didn't dive too deeply into the non-payroll expenses. That did get extensively expanded during the signing of the Economic Aid Act. So that means that folks that may have gotten a loan back in 2020 or early 2020 before the Economic Aid Act was signed, that means they are, they can go by the most recent rules, the amended rules. So if they had to utilize some of the expenses for non-payroll purposes, but initially it wasn't considered an eligible expense, if you're going for forgiveness now, you will not have to worry about having your forgiveness reduced by any amount based on when you actually applied for the loan. So you'll get grandfathered into any of these new changes. So as far as payroll costs, so these are going to be the payroll costs that were initially defined, under the CARES Act. And also the Economic Aid Act. So, your general wages, tips, other forms of similar compensation. But then it also, includes all of your, the majority of your benefits. So costs related to the continuation of group healthcare, life, disability, vision, or dental benefits during periods of paid sick, medical, or family leave, and group healthcare, life, disability, vision, or dental insurance premiums. Okay, and then on the non-payroll side, added to some of the original non-payroll expenses are your covered operation expenses. So these are payments for any business software or cloud computing service that facilitates business operations, product or service delivery. It also includes the processing, payment, or tracking of payroll expenses, human resources, sales and billing functions, or accounting or tracking of supplies, inventory, records, and expenses. So that covers a lot right under that area. And then also too, maybe depending on where you were located, you might have had some property damage costs due to, different, things going on, during 2020. So maybe there was some looting or vandalism that wasn't covered by your insurance. So if that was the case, you can utilize PPP funds for those, damage costs as well. And then worker protection expenses, these, most folks now are probably, buying, PPE equipment to some degree, depending on the industry you're in and, how many employees you have. So you can spend PPP funds on PPE equipment. I know that's a mouthful. We're getting used to this alphabet soup here on the federal level with all the different programs and acronyms going on. And then there's also covered supplier costs that were added due to the Economic Aid Act. However, one thing you want to keep in mind, what did not change is the amount of funds that you can use overall for your non-payroll costs. So with this program, you have to use the majority of the funds on payroll, right? So that's truly what this program is for. So at least 60% of the funds need to be utilized for eligible payroll expenses and no more than 40% for eligible non-payroll expenses. Just keep in mind too, let's say you did not hit the 60% threshold. Maybe you only used 55% of your PPP funds on payroll. That does not mean that your loan will be not forgiven in total. It will just get prorated both on the payroll side and non-payroll side based on the percentage you did use on payroll. Okay, so you're not all is lost just because you did not hit that 60%. And then also on the flip side, you can use these funds for 100% of payroll. You do not have to utilize the funds for non-payroll expenses. It's just an option if you choose to do so. So some payroll costs eligible for forgiveness. This is a further breakdown as far as, what the payroll costs consist of and, the different thresholds depending on the cover period you're utilizing. So keep in mind, with the PPP funds, you as the borrower can elect anywhere from 8 weeks to 24 weeks to utilize these funds from the day you had the funds dispersed to you from your lender that you worked with. Now, what that means is, some folks, they're going to utilize these funds over 8 weeks, and that's going to be considered their cover period. Some are going to take the full 24, or you can take any mix in between there. You don't have to do 8 or 24. Initially when this program first rolled out, it was 8 weeks for everybody. Then the Flexibility Act that was signed back in early June, created some leeway and extended the cover period so you could elect anywhere from 8 to 24 weeks. Now the Economic Aid Act signed, they basically have wiped that out. You can just select 8 weeks all the way up to 24 weeks. It's just your preference based on your particular situation for your business. I know that can be very confusing with everything that's being signed and changed over the course of last year. But for the most part, payroll costs are going to be paid or incurred during the covered period. Those are the costs that will be eligible for forgiveness. So you may run into a situation where your payroll runs past your covered period. As long as the cost of that payroll was incurred during your covered period, it's fine to pay it after the covered period. Also, too, costs are going to include your salaries, your wages, commissions, similar compensations. Everything is going to be capped at $100,000 based on the calculations. I'm sure most folks at this point know that when they originally applied for the loan, if they had any employees that made more than $100,000, they had to cap them when they were doing their PPP calculation. So when it comes to the maximum compensation replacement you can give an individual, if you're using the max covered period, the maximum amount is $46,154. And then for 8 weeks, the maximum would be $15,385. And then it would just get prorated based on what week, how many weeks you chose if it was in between those timeframes. Borrowers may also include covered benefits for employees, but make sure it's not owners, including healthcare expenses, retirement contributions, and state taxes imposed on employee payroll paid by the employer. Also, too, when it comes to forgiveness for owners' compensation, here's the general breakdown depending on the type of organization your business is. So forgiveness is going to be capped at 2.5 months worth of an owner, employee, or self-employed individual's 2019 or 2020 compensation, with a max of up to $20,833 per individual in total across all businesses. There's going to be a little leeway there depending on, for say, like a second draw loan that you may have next code 72, which is like the food and service and hospitality industry. They gave a little bit of leeway because you calculated your, you could have calculated your PPP amount on a larger threshold. So I'll explain that later on in the presentation. But overall, you see here, C Corp owner employees, they're going to be capped by the prorated amount of their 2019 or their 2020 employee cash compensation and employer retirement and health, life, disability, vision, and dental insurance contributions made on their behalf. If you're an S Corp owner employee, it's going to be capped by the prorated amounts of either their 2019 or 2020 employee cash compensation and employer retirement contributions made on their behalf. And then for Schedule C and F filers, it will be capped by the prorated amount of their owner compensation replacement, again, calculated based on 2019 or 2020 net profit or gross income. And then again, general partners capped, based on using their 2019 or 2020 net earnings from self-employment. And then they can multiply it by that amount listed below, the 0.9235. Now, the reason I say 2019 or 2020, because depending on which financial information you utilized to get your PPP loan, you're going to utilize that same data to figure out what your cap is. So just some more information again on non-payroll costs. So again, when it comes to non-payroll costs, they can be paid during the covered period. Also, if it's incurred during the covered period and paid on or before the next regular billing date, even if the billing date is after the covered period. So similar to how payroll, if your payroll, happens to be outside of that covered period, as long as the expenses were incurred during the covered period, you're fine. You just can't, make any sort of like prepayments. So interest payments on any business mortgage obligation on real personal property that was incurred before February 15th of 2020, but not any prepayment of or payment of principal, and then payments on business rent obligations on real or personal property under a lease agreement in force before February 15th, 2020. So it's very important that when it comes to these types of payments, whether you had mortgage obligations, whether you had rent obligations, whether you had these utility obligations, you want to make sure that these types of expenses were in place prior to February 15th of 2020. That is the date that is established under the PPP program for when the pandemic started. I don't know if that's, really true as far as in the sense nationwide, but that's what it's established under the Paycheck Protection Program. So you might run into a situation where maybe you had, your lease, that was up for renewal at some point during 2020. That's fine. You're still covered. If you just renewed your lease that you had prior to that February 15th of 2020 date, you're fine. You're still covered there. As long as you have paperwork that can show that in case your loan ever does get submitted for a random audit or random review, you just want to have record of that. But we definitely understand that things may come up for renewal, during the course of 2020. So those will still be covered expenses. And then, as far as, the eligible non-payroll costs, you want to make sure that you refer back to, I think it was slide 5 for the additional, costs that got added to the Economic Aid Act. So, these next few slides, we're going to go over, some definitions for the program, some information when it comes to, some of the things that may cause reductions in your forgiveness application, such as, your count of full-time equivalent employees, or, how you count your salary and wage reductions. But for the most part, I want to make sure, I reiterate again that, the SBA, this program, they're not looking to basically nickel and dime folks on a lot of these types of possible reductions. So there are a lot of policies and procedures in place that, depending on the size of your loan, you may be exempt from these certain situations. I would say for the most part, if you have a very large PPP loan, you probably are going to need to be concerned with some of these things that may reduce your forgiveness loan. But if you have a loan of $150,000 or less, or if there's other exemptions that may apply to your situation, you're probably not going to have to worry too much about these things that I'm going to talk about. So what is a full-time equivalent employee? So under this program, a full-time equivalent employee means an employee who works 40 hours or more on average each week. If less than 40 hours, you can prorate or use 0.5 for any part-time employees. Okay, so just as an example here, if an employer has an employee who works 10 hours a week, the employer can prorate that employee based on the actual hours worked. So, it could be for 10 hours, it would be 0.25 or a quarter, and or apply all employees that average under 40 hours at the 0.5 FTE count rate. So just keep in mind, when you're doing this calculation as an employer, you can only choose one of those methods. You can't go back and forth on your part-time employees. So some reduction considerations that you want to, factor into when it comes to FTE counts. So a reduction in FTE employees during the covered period reduces the loan forgiveness amount by the same percentages as the percentage reduction in FTE employees. Okay, so borrowers, based on the guidance, the borrowers must select a reference period that you want to compare your FTE count to. So you can see the reference periods here. You have your February 15th of 2019 through June 30th of 2019. You can also look at January 1st of 2020 through the end of February of 2020. And if you're a seasonal employer, you can either of the two preceding methods above or a consecutive 12-week period between the February 15th of 2019 and February 15th of 2020. So if the average number of FTE employees during the covered period is less than during the reference period, the total eligible expenses available for forgiveness is reduced proportionally by the percentage reduction in FTE employees. So just as an example here, if you have a borrower that had 10 FTE employees during the reference period, and this declined to 8 FTEs employees during your covered period, so that's your time frame that you utilize the funds, the percentage of the FTE employees declined by 20%, and thus only 80% of the otherwise eligible expenses are available for forgiveness. So it gets prorated based on that situation. But however, we'll talk about, there's plenty of exemptions that I feel like most folks probably aren't going to have to worry about these types of things. So FTE exemptions. So this is going to apply to both first and second draw PPP loans. Okay, so when you're going for forgiveness, it applies to both of your PPP loans. So borrowers are exempted from the loan forgiveness reduction arising from a proportional reduction in FTE employees during the covered period if the borrower is able to document in good faith the following. So this is one thing that you'll hear from probably me a lot on this presentation, or you hear from the SBA a lot, is document, document, document. We're all about making sure you document everything when it comes to your business, expenses, communications between your employees, whatever the case may be. So you want to document the following: an inability to rehire individuals who are employees of the borrower on February 15th of 2020, right? So, we're talking real life situations here. You're not always going to be able to rehire everybody back. There's going to be a variety of circumstances, I'm sure, that caused issues with that over the course of 2020, health concerns, unemployment, whatever the case may be, benefits, things like that. Inability to hire similarly qualified individuals for unfilled positions on or before December 31st, 2020, or for a PPP loan that was made after December 27th, not later than the last day of the loan's covered period. Okay, so again, the SBA is not looking for you to just hire folks to hire folks. We don't want you to just hire someone to fill a slot so you don't have to worry about FTE reduction. So just make sure that you have documentation supporting that. And then employees fired for good cause, voluntary resignations, or voluntary requests, a schedule reduction. Those things, again, are going to happen in the everyday small business world, right? You're still going to run into these same types of issues that had you would if the pandemic did not exist. So just make sure you document those instances. And then also too, you want to document in good faith an inability to return to the same level of business activity as the borrower was operating at or before February 15, 2020, due to compliance with requirements established or guidance issued between March of 2020 and the end of December of 2020, or for loans that were made after the end of December, not later than the last day of the loan's covered period, by the Secretary of Health and Human Services, or the CDC, or the Occupational Safety and Health Administration, related to maintenance of standards, for sanitation, social distancing issues, et cetera. I feel a lot of small businesses could probably use this documentation as evidence for any sort of exemptions, because anybody in the restaurant industry, food and service, any hospitality, you more than likely still, right now, you are not operating at the same capacity you were, back in early 2020. So, just have that documentation. Look at the state guidelines, that is preventing you from maybe hiring the same workforce you had previously. And then note, borrowers should maintain written records of these FTE exemptions. So, when it comes to the health and safety standards, just, print out what the state outlines, just have that printed out, so you have that up to date. And then also too, another important note, a borrower with a loan of $50,000 or less is exempt from these FTE and salary and wage reductions that I'll talk about on the next coming slide. So if your loan is $50,000 or less, you're not going to have to worry about any of this anyways. So salary and wage reductions. So these are some reduction considerations. So a reduction in an employee's salary or wages in excess of 25% will generally result in a reduction in the loan forgiveness amount, unless an exception applies. This reduction calculation is performed on a per employee basis, not in the aggregate. Okay, so this reduction is performed based on the covered period and the reference period applicable to the first draw or second draw loan. One thing you want to note is to ensure that borrowers are not double penalized. The salary and wage reduction applies only to the portion of the decline in employee salary and wages that is not attributable to the FTE reduction. So, if you had to reduce hours on someone or lost an employee, you're not also going to get penalized because their salary and wage levels were reduced beyond 25%, because that's already being factored in. You've already had that FTE cause that factor, so you're not going to get hit twice. And remember, when we're talking about salary reductions, it's in excess of 25%. All right, so if you only reduced it 20%, if you only reduce it 15%, you do not have to factor that in as far as possible reduction. So what are some exemptions? Again, this is going to apply for both first and second draw PPP loans. So a borrower will be exempted from the salary and wage reductions if they restored their salary and wage levels by 12/31 of 2020, or for PPP loans made on or after 12/27/2020, restored their salary and wage levels by the end of their covered period. Okay, so you have up until that time. Even for someone who may have gotten a first draw PPP loan back in April of 2020, you had until the end of the year to make sure you had their wage levels brought up to normal wage levels. Also, again, when it comes to loans for borrowers that had a loan of $50,000 or less, you are automatically exempted from these FTE and salary and wage reductions. So as you can see, $50,000 threshold there, there's very little you're going to have to worry about other than just basically submitting a forgiveness application. And then, so, just some information when it comes to gross receipt reduction. So this is the gross receipt reduction only applies to second draw PPP loans, okay? So this is not part of first draw PPP loans, no matter when you got the loan, whether it was a first draw in 2020, whether it was a first draw in 2021, this is only applying to second draw PPP loans because this was part of the rules to get a second draw PPP loan. So for-profit businesses, because it's going to be a little bit, based on, what documentation you have to review, it's different for-profit versus nonprofit. So for-profit businesses, you're going to look at gross receipts are going to be generally all revenue in whatever form received or accrued. So this is going to depend on your accounting method that's used from whatever source, including from the sales of products or services, interest, dividends, rents, royalties, fees, or commissions, reduced by returns and allowances, but excluding net capital gains and losses. These terms carry the definitions used and reported on IRS tax return forms. So a couple of things you don't want to include in gross receipts. So taxes collected for and remitted to a taxing authority. If included in gross or total income, such as sales or other taxes collected from customers, you have proceeds from transactions between a concern and its domestic or foreign affiliates. Also amounts collected for another by a travel agent, real estate agent, advertising agent, conference management service provider, freight forwarder, or customs broker. So that that will only apply to a few industries. And then all other items such as subcontractor costs, reimbursements for purchases a contractor makes at a customer's request, investment income, and employee-based costs such as payroll taxes may not be excluded from gross receipts. And then for nonprofit entities, it's a little bit different because there are obviously different types of organizations. So whether you're a nonprofit, the 501c3 organization, C19, a veterans organization, eligible nonprofit news organization, or a 501c6 or an eligible destination marketing organization, your gross receipts means gross receipts within the meaning of Section 6033 of the Internal Revenue Code of 1986, which is the gross amount received by the organization during its annual accounting period from all sources without reduction for any costs or expenses, including, for example, costs of goods or assets sold, costs of operations, or expenses of earning, raising, or collecting such amounts. Thus, gross receipts includes, but it's not limited to, and here I won't go over each bullet, but because I'll make sure everybody gets this presentation. But the first one, you have gross amount received as contributions, gifts, grants, and similar amounts without reduction for the expenses of raising and collecting such amounts. Towards the bottom, you have the gross amount received as investment income, such as interest, dividends, rents, and royalties, and some of these others in between. I just want to make sure we have enough time, for questions at the end. But this is something that you can review, at a later time if it pertains to your situation. So when some additional information with gross receipt reduction, you got to compare your overall reduction to a select reference period depending on your situation. So for all applicants, except those satisfying the conditions set forth below, the applicant must demonstrate that gross receipts in any calendar quarter of 2020 were at least 25% lower than the same quarter of 2019. So alternatively, applicants may compare annual gross receipts in 2020 with annual gross receipts in 2019 if they were in business in 2019. So what the SBA means by calendar quarter is a typical January through December calendar. So January, to March would be quarter one, April to June would be quarter two, et cetera, et cetera. So, I know folks may have different fiscal years and things like that depending on their operation, but we are going by a standard calendar year. Also, too, when it comes to making sure that you show at least a 25% reduction, this is a hard 25% as the bottom line, right? So let's say you calculated and you came out to 24.8%. You technically are not eligible for second draw loan or second draw forgiveness. It's got to be 25% or more. So for a couple other instances that may change how you do the calculation. So for entities not in business during the first and second quarters of 2019, but in operation during the third and fourth quarters of 2019, applicants must demonstrate that gross receipts in any quarter of 2020 were at least 25% lower than during either the fourth or the third or fourth quarters of 2019. So depending on when you started your operation, that may apply to you as well. Also, for entities not in business during the first, second, and third quarters, but in operation during the fourth quarter of 2019, applicants must demonstrate that gross receipts in any quarter of 2020 were at least 25% lower than the fourth quarter of 2019. So that, that's important. So, if you didn't have a full operating year in 2019, you can compare it with any quarter in 2020, depending on, these situations below. And then for entities not in business during 2019, but in operation on February 15th, 2020, because remember, February 15th, 2020 was the last day that you could show that you were in operation for this program. Applicants must demonstrate that gross receipts in the second, third, or fourth quarter of 2020 were at least 25% lower than the first quarter of 2020. I know that's a mouthful, but again, we'll make sure everybody has this presentation to review it afterwards. And then what are some, supporting documents that you may need to supply, your lender? So, you can supply quarterly financial statements for the entity. If the financial statements are not audited, the applicant must sign and date the first page of the financial statement and initial all other pages attesting to their accuracy. If the financial statements do not specifically identify the line items that constitute gross receipts, the applicant must annotate which line items constitute gross receipts. So it's very important to make that clear to your lender. Also, too, quarterly or monthly bank statements for the entity showing deposits from the relevant quarters. Again, make it clear which and annotate what constitutes as gross receipts. And then annual IRS income tax filings of the entity. If the entity has not yet filed a tax return for 2020, the applicant must fill out the return forms, compute the relevant gross receipts, and then sign and date the return attesting to the values entered into the gross receipts computation. So, we understand a lot of folks probably haven't finished filing their taxes, but if you can provide that information, that's another form of information that you can provide to your lender. So this is just a general rundown of the process that goes on, on the lender side of things. So, a lot of folks, I know everybody's working with a variety of different lenders, whether it's an online lender, whether it's a credit union or another local, traditional bank in your area. But typically, this is what, the lenders are. Their process is, just, for informational purposes, for the borrower. So the lender is going to review the application that's received and regarding the loan forgiveness. So, and then the lender can take up to 60 days from the receipt of a complete application to issue a decision to the SBA. So what happens is the lender that you're working with, they are making that initial decision whether to forgive the loan or not, depending on the situation. And then what's going to happen is once they make that decision, they submit that to the SBA. So there's a PPP portal that just the lenders have access to. Like myself at the office and my colleagues, we don't even have access to it. So that they're going to submit their final decision with whatever supporting documentation that was necessary. And then what the SBA is going to do is they're going to take, a look at that and remit the amount that needs to be forgiven. So this is going to be based on the lender's decision though. So, typically the SBA doesn't do a separate review unless the particular loan forgiveness application they received gets selected for a random audit. So they'll go based on what the lender ended up deciding. They won't, very rarely do we see them countering what the lender states unless the particular forgiveness application was selected for an audit review. So the SBA, for the most part, has been taking under 90 days for forgiveness decisions. However, all large dollar loans all of them are up for special review based on loan amount. So you're talking about any loan, $2 million or more. If that's your situation, expect a long review time frame. There's been several, I think I want to say almost 100,000 forgiveness applications in the queue. The majority of them get decided within a couple months, but the larger dollar loans do get processed under a different review process, and they do all get looked at for auditing purposes across the board. And then even if you have a small dollar loan, you may get selected randomly on the small dollar loan side for a review. So your lender, what's going to happen is if your loan ends up getting submitted for a review, your lender will let you know, and they will ask probably for some additional supporting documentation. But for the most part, once the borrower receives remittance from the SBA, your lender will notify you within a few business days. And then for the most part, we're seeing, like I said earlier in the presentation, we're seeing that the loans have been forgiven. 99% of them have been forgiven. If your loan has not been forgiven, what your lender will notify you about your installment payments on whatever remaining amount you end up owing, whether you've been partially forgiven or not forgiven at all. So they'll set up a payment schedule for you to pay off that loan. Remember, these loans are at 1%. For the most part, depending on when you got your loan, it could be a term of 2 years or 5 years. It just depends on the note that you signed with your particular lender. And then what the lender is going to do is also report on that loan on a monthly basis to the SBA if it was not fully forgiven. And then what are the steps for you as borrowers? Okay, so make sure number one step is, to find out what form you need to utilize and what processing method your lender would like you to start when it comes to the forgiveness process. Contact your lender to find that out, because every lender is doing it differently. You could have a lender that wants the paper application, the forgiveness application. You could be working with a lender that wants you to, that is working with a third-party vendor that wants you to sign in there and submit the application online. Every lender is doing it differently, so make sure you work with the lender, you receive that PPP loan, and they will direct you with the proper directions on how to apply for forgiveness. And then you'll need to compile any sort of documentation that pertains to your situation, right? So not everybody is going to need to supply their lender a lot of documents. It just depends on your situation. If you're dealing with a small dollar loan, say $50,000 or under, there's very, very little documentation you're going to need to supply. If you're dealing with a large dollar loan, you're probably going to need to supply more information. So you'll submit that. Once you figure that out with your lender of how to submit the forgiveness application, you want to do that. And then if you have any questions as far as the status goes, check with your lender, throughout the process. But like I said, for the most part, most decisions get made, turned around fairly quickly. But the larger dollar loans do have a much longer process in general. So on the right-hand side of this slide is your 3 different forgiveness applications. So the SBA Form 3508S, that is the newest version. This is our streamlined application. These are for loans Anybody that has a loan of $150,000 or less can utilize this particular application. It's pretty straightforward, pretty simple. You're really just plugging in a few numbers. You're not required to show your calculations or anything. And then you're just attesting to a few things that that you provided the correct information to your lender. And then you're good to go. And then you have your Form 3508EZ, which this helps folks that may need some of the exemptions that I talked about earlier when it comes to those health and safety standard exemptions, or you need exemptions for the FTE or salary and wage levels. A lot of times you would utilize the 3508EZ. Again, this form is pretty simple. If you just follow the format, it does ask for the calculations, but it's pretty simple math breakdown. And then your SBA Form 3508S, which is your long standard application. This was the one that initially came out and really scared everybody, including myself, because it's about a 9 to 10 page document. We don't see too many folks using this. Again, it's probably your larger small business establishments that are utilizing this application. I would say 95 to 96% of the people I talk to are utilizing the first two applications. So some updates when it comes to the 3508S. So you can utilize, these applications for either the first or the second draw application. So that, just want to make sure that you cannot combine your first and second draw PPP loans into one forgiveness application. You have to have a forgiveness application for your first draw and a forgiveness application for your second draw PPP loan. So this, like I said earlier, it's going to require fewer calculations, less documentation for eligible borrowers. Does not require borrowers to show the calculations used to determine their loan forgiveness. However, SBA may request that information and documents to review those calculations as part of its loan review or audit process. So just keep that in mind. Even though you're not being asked to supply that information, the SBA can always in turn tell your lender that your loan is selected for a review and you may need to supply additional documentation. So regardless of what you have to submit, make sure you retain all records for your own retention purposes. If this loan is a forgiveness application is being submitted for a second draw PPP loan, the borrower must submit simultaneously to its lender documentation supporting gross receipt reduction certification on the borrower's loan application. So that was one thing when it came to second draw PPP loans. If your loan was going to be for $150,000 or less, initially you did not need to provide your lender the proof of your gross receipt reduction at the time of your second draw application. However, when it comes time to forgiveness, you will need to supply that information regardless of the amount of your loan. So keep that in mind. And then, these next few slides, I'm not going to go over them verbatim because, what you'll see too, if you go on SBA's website, you go to the COVID-19 relief section, the PPP program has its own landing page that provides the instructions for each forgiveness application that lists what type of documents you may need to compile for payroll and non-payroll expenses. So, I'll just, kind of go through these briefly because, as far as, what supporting documentations you can supply, it's relatively the same across the board. So you just want to, whether you have to supply that to your lender or not, just make sure that you have these documentation pieces on hand for your own retention purposes, if need be in the future. And again, here's a slide that just shows the supporting documentation. But like I said, when you look at the PDFs for each application, the instructions that list all of these are right in the back of the application itself. And then these are just some good links that you want to just keep note of when it comes to the forgiveness guidance. So, like I said, the Paycheck Protection Program has its own landing page. Within that landing page, you have, all the different amendments that were made and the guidance within those amendments. Also, too, you have information that's specific just for PPP loan forgiveness. And then also too, they break it out into different sections. So if you need more information about second draw PPP loans, if you need more information about first draw PPP loans, if you have general questions on PPP forgiveness, there's a FAQ document that has been updated frequently to provide you information on PPP loan forgiveness as well. So all of that is listed within those links. But like I said, you can just go to sba.gov and you should be able to find that, just by, it's always good. I always like to tell people to go and play around with the site and just, see where everything is and, see what other programs and services are out there too. All right, so, that's the end of the presentation. I know we went a little bit past an hour, but we can open it up for, I'll take down this screen here, and then we can open it up for questions if anybody has any.
Yeah, and Michael here from the Chamber, everybody. Thank you so much to Dan and Caroline for joining us today. Like Dan was saying, if you have any questions, feel free to drop them in the Q&A box. And as always, if you have a question that you think of, 2 seconds after we close the Zoom or whatever, just send an email to Thais or Owen or myself, and we can forward the message along and get you an answer in due time. So yeah, if anybody there are no questions in Q&A right now. So if anyone has any, please drop them in. We'll give you a minute or so to type everything out. Otherwise, we'll just go ahead and wrap up.
Crowd's easy on me.
Yeah, yeah. I think it was very comprehensive. I think you answered all their questions ahead before they could even ask them.
Yeah, I'm sure most folks, after I do these, folks' heads are spinning and with all the information that's outlined, and that's why at least it's a good thing. You'll get the information to review. You get the recording. You can go back and listen to some of the things I said to clear some things up for you. So
absolutely,
yeah, I know it's a lot of information to soak in. So.
And sometimes the question doesn't come up until you get 8 pages into the form or whatever.
Yeah.
So sometimes you think you're all set, and then you get there and you're like, oh. So
yeah. Cross your fingers, everybody. Don't have to use that long format.
Yeah.
That's about 8 or 9 pages. The other ones, if you look at them, they're not scary at all. But like I said, I think most folks will be utilizing either the forgiveness application 3508S or 3508EZ. Your larger establishments will, with a few hundred employees, they'll probably be looking at that standard version, the 3508S. 3508, sorry.
I think you're right, Dan. I think for most of our folks, the process should be fairly simple, but it is so helpful to have you here today explaining everything. We are so deeply appreciative of your time and your willingness to be here. As Dan said, we will share both the presentation and the link to this recording, so that everyone can go back if they have any questions about the process, about any of the explanation, and you can always get in touch too. And you all have my email. So feel free to get in touch, and I can pass along questions to Dan and Caroline too. So let's check. Doesn't seem like there's anything that's been popped into Q&A. So thank you again to both of you for being here, for always being there for our businesses, for me personally when I reach out to you with all of my questions. Really thankful to you both, and to the district office generally for all of the help that you have provided to businesses in Massachusetts. We really appreciate you. Thank you.
You're welcome. Anytime, happy to, be of help where we can, and, please feel free to continue to reach out with any questions in the future, and we're happy to help out.
I dropped the district office email in the chat, as well as my email too. So if anybody has questions, I'll try my best. But like I said, Dan knows everything. I do not.
Don't put that in. Take that off recorder. That's not sanctioned.
All right. Well, thank you everybody for joining us. Keep an eye out for upcoming programming, and have a great rest of your day.